Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at stevesaretsky.com. Welcome back to the show, Steve.
Yeah, always a pleasure. Thanks for having me on again.
The February real estate numbers are now out. Can you give us a run-through?
So as I like to say, it's sort of a continuation of the trend. As I like to remind people that, real estate markets, when they go through correction territories, it's kind of like turning the Titanic around. It's a very long, drawn-out, lengthy process. And so basically what we saw in February was, again, a continuation of that trend. So you saw condo sales in Greater Vancouver slip to a 10-year low for the month of February. So it was the fewest sales for this month since February 2009. And then for the detached housing market, continues to be a significant amount of weakness in that segment. So you saw sales fall to as far back as my data goes, so it was 1992. So it was the fewest sales that I have on record for the month of February. So I think the sales numbers ultimately speak for itself. That's basically as the liquidity sort of dries up and homes sort of get no bid. Eventually, it's sort of a gradual reduction down. So we're seeing prices edge lower, not only in the detached segment, but in the condo segment as well. So whether you're selling a luxury house or a one-bedroom condo, prices are moving lower. The official MLS benchmark, which again is ultimately a lagging indicator, the detached price fell 10% year over year, and then the condo prices were down, I believe it was 4 or 5% year over year. Which again was really underreported. I mean, the parts of the detached housing market, I would say, are down anywhere from 15% to 35%, kind of depending on your sub-market and your price point. And then for the condos, I'd say pretty unanimously they're down about 10 to 12%.
How does February 19 look versus January 19?
What we see is, and I think this is where people get a little bit confused and maybe realtors in the industry get a little bit too hyped up on, is what you see is you always see a month-over-month increase from January to February, and then you'll see it again from February to March, probably from March to April. So this is all part of like a seasonal uptrend where as the spring comes closer, people get more active going out to open houses, and so we always see the highest amount of sales always comes during the spring season. That's why what you see is a lot of sellers holding off new listings and their inventory, and they also tend to list their homes for sale on the spring market. So that's definitely our busiest part of the year, and so what we see is an increase in sales for sure from January to February, but that's just part of a normal seasonal trend. It really shouldn't be something that people look into and get all excited about. I think that coming into March, April are arguably our two busiest months of the year. I think that's going to be extremely critical moving forward to determine the future direction of the market.
How does February this year compare to February last year?
So sales were obviously lower in detached and condos, as I mentioned earlier. I think condo sales, I believe, fell between 35 and 40% year over year, so a huge drop off in the sales in condos. And then the detached, last year was a miserable year for detached sales, but they still fell year over year, I think by about 25% or something like that. So, seeing that detached home sales are pretty much at basically 25, 30-year lows, I think that you're likely to see a bottoming out in sales volumes. They really can't get any lower, but what you'll most likely see is the prices edging lower, and that will start enticing more buyers in. So what you'll probably see is an increase in sales, but a decrease in prices as that segment moves forward.
We'll have more with Steve Saretsky right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Steve Saretsky. Steve, do you have the latest numbers for the rest of BC?
I don't have those numbers per se yet. We're still waiting on those. Those usually come out sort of middle of the month. But preliminarily talking with agents it's just a continuation of the trend in those other areas like Victoria and the Okanagan. They continue to slow, and they're basically on a lag effect on Vancouver. They're probably, I would say, 10 or 12 months behind of where we are. So I think their sales numbers will continue to dry up, and I think you'll continue to see prices edge lower, but again, on a lag from Vancouver. So people living in those areas, if you want to sort of gauge where your market's heading, all you have to do is look at Vancouver, and I think that's the leading indicator. It was certainly the leading indicator on the way up. As prices exploded higher, people cashed out equity and moved over to the island or the Okanagan, etc. And now as prices basically start to decline and liquidity evaporates in the lower mainland, there's just a lot less money moving out from Vancouver and into those areas.
Is Canada likely in a real estate-led recession?
Yeah, I mean, I certainly am in that camp. I mean, we had national home sales for 2018. That was the fewest home sales since 2012, and 2012 was a disastrous year for Canadian real estate. It was a really weak sales year. So given the fact that we had national sales at the lowest since 2012, I think that's pretty indicative of the weakness in the Canadian housing market, particularly led by Vancouver. Toronto and Alberta looks really weak, obviously with the oil and gas sector there right now.
What are you hearing on the street about what's going on with real estate?
There seems to be, I think, a lot more awareness is starting to filter through. Obviously, the media now reporting significant sales declines, and prices are being reported on a year-over-year decline now, which has only just started to begun. Just the way that the media reports data and the way that data is collected. That usually the media is ultimately a very much a lagging indicator. So we're starting to see that being reported much more frequently in the media. I think that's weighing on consumer sentiment. So working with, a lot of buyers and just talking with other agents there's just a lot of hesitation from buyers to pull the trigger. So people are reporting a lot more traffic at open houses. People are out there looking, realtors are getting all excited. But again, you have a lot of people coming through open houses, but ultimately, people are very reluctant to, put pen to paper. And so that sort of seems to be the general sentiment right now, is just, a lot of caution towards entering the market at this stage with a lot of people believing that prices can or could go lower.
Right. Do you have any idea where the stop point is?
No, I mean, I think that's hard to pinpoint. Obviously, if I could time the bottom, I'd be a pretty wealthy man. But, yeah, I mean, it's going to be interesting to see. I think just the way that the stats, again, are pulled in and reported, they are kind of like a lagging indicator. So what we're seeing right now, again, is the MLS benchmark price, which is what the media reports on, is showing that detached prices are down 10% year over year. But again, if you actually talk to any realtor that's running a comparative analysis on a day-to-day basis and actually evaluating homes, these homes are down a lot more than 10%. They're down anywhere from 15 upwards of 35% if you're trying to sell a luxury house. So it's I think an important distinction to make, because I think what's going to happen is the price declines are going to continue to deteriorate and decline on a year-over-year basis, regardless of even if the market begins to start to turn around. There's such a lag point in terms of how the MLS benchmark is reported. And so I think that's the most likely scenario. And so I think a lot of sellers right now are sort of holding out to and staying firm on their asking price. And I think they're not as educated on really how significant of a price correction and of a market correction that we're actually going through. So there's, I think, still quite a bit of denial out there from sellers as well.
We'll have more with Steve Saretsky right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, when does the spring market start?
We're entering it right now. I would say March, again, is pretty busy sales month. I would say March, April are your two busiest. May is generally pretty busy as well, and then as soon as you get into June, it starts to slow down a bit. July, August, when people are going on vacation, and it gets even slower. So there's definitely a seasonal trend to real estate, and I would say the two busiest times of the year are the spring selling season. So March, April, May, and then I would say the fall, September, October are generally pretty busy as well. So those are the, if we have a slow real estate market here in March, April, I think that really sets the trend for the rest of the year moving forward. And obviously, seeing the January and February numbers coming out is pretty discouraging. I think that's, it's definitely setting up for a weak March. So I'll be really shocked to see if there's some sort of dramatic turnaround in March. I suspect that we'll continue to see soft numbers in March.
Are foreign entities currently buying or selling?
I think it's hard because they don't have any real data, hard data on it. But I think if I was to say anecdotally, I would argue that they're probably more net sellers today than they are net buyers. And that's definitely the case through official data being reported in the U.S., that they seem to be net sellers. And I would imagine that Vancouver is likely no different, particularly with the taxes, right? 20% foreign buyers tax, annual speculation tax of 2% on satellite families. That's a huge hit to the luxury market, pre-sale market, et cetera. So, and it's been a huge driver of our market from 2015, 2016, and even partially in 2017. So, you can certainly see those capital flows, drying up.
Is Vancouver now in a textbook housing crash?
Man, that's a tough one. I mean, I'm hesitant to use the word crash. But I mean, I think the sales numbers, speak for themselves. I mean, I think if you look at, again, for Greater Vancouver, I'm not just picking the city of Vancouver. I'm saying, okay, let's look at the entire Lower Mainland. Let's look at the detached housing numbers. Okay, well, we're now reporting 30-year lows in the detached sales numbers. To me, that certainly speaks crash territory. I mean, 30 years low in sales, let's not even accounting or adjusting for population increases that we've certainly seen over the last decade. So, yeah, I mean, that's where it's at. You can say the same thing for the condo market, 10-year low, given that we have a lot more condos being built, and we have a lot more population growth, that those numbers certainly don't bode well. And so we're certainly seeing that now in price reductions. I mean, if you had said to anybody 2 or 3 years ago that, hey, listen, in 2 or 3 years, your sales volumes are going to crash to 20 and 30-year lows, I think that someone would have looked at you and said, you're absolutely crazy. Get out of here. But, now you're seeing the same sort of thing, right? If you said, hey, in 2 years' time, I'll bet you that luxury homes are down 30%. Well, again, I think someone would have looked at you and thought you're pretty crazy. So I would say that it's definitely caught a lot of people off guard. So yeah, I mean, whether you want to call it crash territory, I guess is up for debate, but certainly the numbers are worth looking at and quantifying, because I think we're going through, potentially here a generational movement here where, people haven't seen anything of this sort, since the 1980s.
All these new government regulations, speculation taxes, foreign buyer taxes, education taxes, luxury home taxes, are these the kind of measures we don't need right now?
Yeah, so again, I think it depends on your political leaning. So obviously when I talk to people, they're very much divided on what can or should be done. So if you talk to anyone that's working a 9-to-5 job and is struggling to keep up, obviously asset inflation running much higher than wage inflation, they're very disgruntled and they want more taxes and they want foreign buyers to be completely eliminated from the market. And then, you go talk to people that actually, that have equity in the market or are in the real estate profession that are just getting hammered. I mean, you could argue, I would certainly think that, this industry, this profession is in a recession of its own, and it has a huge weighting on the economy that, when you go through a substantial home price correction, as we are going through right now, that this is going to have significant knock-on effects. And as we can see in the Q4 GDP numbers, I mean, it was abysmal. There's no way to say it. Construction's contracted for 7 consecutive months. Canadian GDP's contracted 3 of the past 4 months. So they're certainly teetering closer and closer towards a recession. And that is primarily because of a huge slowdown in housing, which has been a huge proponent of the Canadian economy. So, you get what I guess you almost have to say you got to be careful what you wish for. But, obviously when housing reaches the unaffordable levels that it has reached, I don't blame people for wanting, a correction in home prices, but again, that does come with repercussions. And certainly when you add on taxes at this stage, like you can say, okay, let's look at the BC speculation tax. You implemented that at the start of 2019. Well, I mean, like I said, the volumes have already completely dried up, and the prices the price correction is already well underway. So the fact of the matter is you're adding on this tax, on top of a market that's already in, deep trouble. I think really is probably bad timing. These sort of policies, I'm a proponent of the stress test. I actually think it should have been implemented, but I think it should have been implemented probably 2 or 3 years ago before the price run up, not as prices are sort of peaking and ready to roll over. And that's sort of when they brought it in. So I think it's bad timing, but that's almost always how, these booms and busts happen, is policymakers come in, they always are reactionary and not proactive. And so they always come in at the very wrong time. Just when the market needs stimulus, they come in and quash things even further. So to me, this is, as we talked about earlier, if you want to talk about sort of textbook crashes, a textbook crash is certainly policymakers coming in late to the party.
The BC budget anticipates housing starts to drop by 1/3 over the next couple of years. What does that do to the economy?
Yeah, and that's, as we just talked about, I mean, we can clearly see that in the GDP numbers. Residential investment fell 15% year over year in the fourth quarter. I think it was in December there. So that's going to weigh significantly on jobs. It's going to weigh on wage growth. I think it certainly weighs on on immigration flows. So what you do is you generally in a housing boom, you get a lot of temporary immigration towards that come here looking for jobs, and obviously there's a lot of jobs available. There's a shortage of trades, and so what you tend to get is a lot of temporary workers coming here to enter the construction workforce, and they ultimately leave as construction dries up and housing starts to fall. And I think that's what we're going to start to see, and that again has a knock-on effect on the economy.
Steve, how can people follow you and contact you?
Probably most active on Twitter at Steve Saretsky. You can email me, steve@stevesaretsky.com. And then I'd also encourage you to go to stevesaretsky.com, my website, where I put out, every month I'll put out a report, basically a detailed analysis of the housing market. It's usually about 10 or 15 pages long. And I think that's going to be a pretty insightful report for anyone if they're interested in that. It's totally free. So,
Steve, thanks a lot for being on the show.
Thanks a lot, Jim. Always appreciate it.
My guest has been Steve Saretsky, a Vancouver-based realtor. He gave you all his contact info there. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at House Street. Questions for the show can be sent to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.